Creamer Media's Mining Weekly is speaking to Bruce Williamson, the Chief Investment Officer of Integral Asset Management. Bruce, investors are searching for opportunities in the commodity space amidst talk of a renewed super cycle. Do the fundamentals of platinum group metals support earlier price gains and warrant buying on weakness or even further appreciation?
We need to just step back because there's been a lot that's happened in the last 2 months. And the price gains that we talked about and that the market experienced, rhodium and palladium, and also platinum, they all bounced back very, very strongly to what I would probably say, certainly rhodium and platinum were extreme highs. And that was driven by the fact that post-COVID, the auto industry globally recovered strongly. And I think it surprised the auto industry itself. And we moved from maybe 85% capacity to mid-90% capacity. And there was just this shortage and a big push to drive auto manufacturing. Now that resulted in a really strong buying of PGMs, and it raced those prices up high. Since then, we've seen COVID persist, and COVID's been inconsistent. It comes and goes through countries despite the vaccine progress, and then a couple of variants have come along, and that's caused inconsistency in deliveries. There's also been extreme weather that's hit logistics, shortages of containers, shortages of drivers, and that's all resulted in a lot of supply chain disruption. But the big one that impacted the auto industry suddenly was the chip shortage, to the extent that auto industry really had to slow down the manufacturing. And now we're seeing obviously less demand for cars. Well, they're just not manufacturing as many as they were, and less demand for PGMs. But PGM demand has actually been reasonably strong. But when you look at this maybe 10-15% cutback suddenly, that is impacting the spot price. So the spot market is not your friend right now. Platinum is down 28%, rhodium is down nearly 60% as a result of the cutback in auto production due to chip shortages. So we've seen a very, very significant pullback. And I guess the question is whether these prices would hold. Ordinarily, I would have said yes, but there are market uncertainties now as to exactly when the chip capacity will be able to sort of make the auto industry happy. And, the general feeling is that chip capacity will slowly start coming back in the next few months. That'll get the auto industry back to where it was pre-COVID. But it probably, until next year sometime, won't get the auto industry back to the post-COVID highs, which took the prices to the extreme. So if we see some increasing delivery of chips, then my guess is that we're probably seeing the market could bottom out here now. And I wouldn't say rush up, but it could gently sort of improve.
Does rhodium still have that potential to offer in time? Can it get back to where it was?
Where it was at just short of 30,000 was very, very high. And that was driven by an absolute shortage, very strong demand, auto demand, and there's just an out-and-out shortage of rhodium. So motor industry could not afford not to buy. And so you had global manufacturers chasing a pretty small amount of rhodium in the market. The way I see the chip manufacturing unfolding is I don't think it's going to be strong enough to take it back to those levels. But I think let's hope that we've seen the worst now and that these levels can hold.
What about palladium? Is that vulnerable to any pullback now?
since about mid-June, we've seen the auto industry now starting to cut back on production due to that chip shortage. And that means either the miners themselves are going to be stockpiling 5, 10, 15% of their PGMs, or the auto industry buy it, not wanting to be caught short, but they're going to hold it as stock. So every month that goes by and the chip supply does not recover, that means PGM inventory is building up. And you can just imagine if it goes on for 6, 7 months, then suddenly there's enough supply there in the pipeline for a while. So it's a particularly difficult period to work out exactly what chip capacity will be delivered to the global auto industry. In the Chilean market, they are waiting 13 months for new cars. The chip shortage is extreme, and we need that to come back. Part of the problem is, I think, is that the chip manufacturers know that G5 technology and infrastructure has been rolled out around the world. Slower than people thought, but it's been rolled out. G5 technology, I suspect, is going to require a higher level of chip technology. And so chip manufacturers are probably not keen to go and invest billions in yesterday's lower level chip technology just to meet this current shortage. And so I think we're in this difficult period where for a few months, we're not going to know which way it goes, and the shortages of chips may prevail, which will keep car manufacturers under pressure. And that means a potential buildup of PGM. So, Martin, it's really, really difficult to know which way this is going to go. Platinum was the one in surplus, and this lull that we're going through due to chip shortages will exacerbate that and just extend that. So hence you saw platinum get up to about $1,250, and it's back down to $920 or so. So it really depends on the chip rollout now.
Over the longer term, all of us have been looking at the green energy and hydrogen economy. There's a lot of policy around the world. They're going in favor of hydrogen economy, strong policy decisions. And so won't it start helping the platinum group metals? Or are we going to find that we're going to lose on the internal combustion engine with cars and not really make up that much with the hydrogen economy? It seems this hydrogen economy could be colossal.
You're saying there's a lot of policy. I think there's a lot of talk. What the world has done is to say we want to reduce the temperatures by up to 1.5% of pre-industrial sort of levels. And everyone, that's almost become a wish list. Lots of talk around it, but I'm not seeing enough policy. Governments need, and we've got COP26 coming up in November, governments need to come out with really good, accurate policy in order that businesses can know what to do and where to go. So my read is that there's a lot of people pushing the EV, electric vehicle side, which fits into the smaller normal autos that you and I would drive. The hydrogen side is probably going to win and cater for the heavy duty, big trucks, buses, etc. But there's hundreds and hundreds of people offering their technology. And so the market's a little bit uncertain as to exactly which technology. Where policy is needed, people are not going to buy electric vehicles or hydrogen vehicles if they cannot refuel and recharge them. And so government need to come out with highly incentivized policy as to why people would put battery stations in place, why the hydrogen fuel path would be built with stations to top up. And until that comes, I think it's going to roll out slower than people think, which means the internal combustion engine prevails for longer than people think. But you're right, for platinum, it's the hydrogen story. And it does not seem that the electric vehicles will push into the big, heavy end of the transport business. The batteries are just far too heavy. The payload on those big trucks would be enormous, and it becomes uneconomic. So the PGMs win there, and it also brings ruthenium and iridium into the game.
So the valuations of platinum group metals mining companies on the stock exchanges, are they reflecting too bullish an outlook for platinum group metals, and could they be affected at the equity level?
I don't think in the run-up go back through 2019, 2020 into this year, I don't think the share prices fully reflected the profitability of our local PGM producers. And that was just because I think the market was not 100% tuned into the PGM basket of prices, i.e. the ratio that you get the metals out of the ground, weighted against the individual platinum, palladium, rhodium prices. And so I don't think the shares fully reflected the prices they were being receiving. And you could see that in the June dividends, 7.5%, 10% dividend yields on mid-year dividends. So it doesn't suggest that the market fully reflected the profitability. So right now, I think the same thing's happening. Prices have pulled back. Share prices have come back very sharply. And again, I don't think the market's quite pricing in today's spot prices. And I can tell you that even at today, the miners will be making very, very good profits.
That was Creamer Media's Mining Weekly, speaking to Bruce Williamson, the Chief Investment Officer of Integral Asset Management.